So good day to everyone. Welcome to our weekly welcome to our weekly report provided by SC Securities. This week, as always, we'll look at some of the main headlines that affected the Sri Lankan stock market and the economy as well. So without further ado, let's get into it. The all share continued its growth driven by index-heavy counters this week. The ASPI rose 2.21% this week on the back of gains in the capital goods sector, coupled with gains in the materials sector. The S&P actually rose by 2.27% this week. We've also provided a performance of the ASPI over the prior month, and we can now see that there is some confidence and some bullish momentum in the all share. So we saw the all share actually witness a dip and some low sentiment over the past couple of weeks due to the uncertainty surrounding the COVID climate in the country and whether or not the country will go into lockdown. But as lockdowns or travel restrictions have been in place, we actually saw the BORS gain on the back of gains from index-heavy counters such as LOLC, Commercial Bank, and Aries. However, and even at the start of this week, we saw the market actually begin on a positive note before there was a slight dip midweek. This, however, was offset by a rebound that saw the all share actually hit a 6-week high. And the gains were mainly driven by the capital goods sector and counters such as LOLC, CIC, and Commercial Bank. In terms of moving forward, we still believe that we can expect this positive momentum as investor confidence clearly seems to be in somewhat of a robust state despite the continued lockdowns, as there is no such vagueness or uncertainty regarding the lockdown situation. We might actually see the market actually now adjust to the current environment presiding in the country. In terms of one of the main market news this week, we are looking at the central bank, which decided to re-amend the rules on the repatriation of exports proceeds again. So the Central Bank of Sri Lanka decided to revert back to a 25% conversion of exports proceeds within 30 days of receipt. And prior to this re-amendment, the rate was actually brought down to 10% in April from 25% in March. However, at the discretion of the Monetary Board, they may actually allow certain businesses or industries to convert at a less than 25% if a very high portion of the imported goods cannot be sourced domestically. However, we have to highlight that the floor level for such businesses or industries will be set at 10%. This is the latest move made as the country grapples with the savings reserves whilst also meeting foreign debt obligation. Personally, we see this as a positive move for the government as it does alleviate some pressure in shoring up foreign currency reserves, because now that it is a buffer of 25%, they can actually gain more forex from this venture. In terms of the rupee and bond markets, the Sri Lanka forex market remained inactive as long-term bond yields still remained constant. So the Sri Lankan rupee bids closed without active quotes on Wednesday, whilst gilt yields remained on the same levels. There was a slight appreciation on short-term bond yields as bonds maturing by the end of 2022 slightly up. However, long-term bond yields remained flat. And in terms of the commodities market this week, we saw that copper actually plummeted to one of its lowest levels on the back of lower demand from China. So copper prices fell to a 6-week low on the signs of weakening demand in China and expectations on US job data. Now, the Yangtze copper import premiums actually fell to $28.5 per ton, which is at its lowest level since 2012. Also, we need to note that investors are also waiting on the US job data, which will be released today at 6 p.m. US time. That will give us some indication as to whether the monetary policy in the US could tighten. However, from what the rumors are surrounding this data release is that it is somewhat of a positive news. So we do still believe that monetary policy will remain as is. We believe that in the short term, prices will be dictated by the US job figures. However, we expect prices to pick up as we head into the last quarter of the year. This is price of copper. Gold also saw a 2% decline to its lowest level since May 2020 due to strong US service sector data that propelled the dollar higher. and US gold futures were down by 2% as well. Oil continued its rally on Wednesday, and some experts actually believe that this summer you will see oil prices potentially rising to $80 per barrel. However, we still feel that this will be offset towards the end of the year due to the fact that a couple of weeks ago we highlighted that the US will be easing off sanctions on Iran. So that should unblock a huge supply of oil into the market, which should bring the prices down. So by third or fourth quarter, we will see a drop in the oil prices if these sanctions are lifted. And in terms of global market wrap, we still see that we still see that stocks ended lower on Thursday as investors digested the news of Joe Biden being open to raising the level of corporate tax from 21 to 28%. European stocks were mixed as investors reacted to fresh economic data and looked ahead to key US job reports later this week. Also, we saw Asian markets were slightly mixed, with the benchmarks falling in Japan and South Korea, but this was offset by increases in China and Australia. However, we still need to maintain that, like the last couple of weeks that we've highlighted, that concerns still remain on our side with the inflationary worries that continue to persist in the US. So it is paramount that we keep an eye on what the inflationary figures are going forward, because that will really determine whether or not the Fed will increase its policy rates. Those are the main highlights this week. I will now, as usual, hand over to Harin, who will take you over a recap of the all share and our pick of the week this week, LOLC. Over to you, Harin.
Thank you, Nuwan. So as I move on with the ASPI, so this is the daily chart and the RSI is 66.21. And last week, I told that if the index manages to break the key level 7373.92, which was actually one of the previous structure highs, so that key level managed to break, and we were able to see how the index went to the previous resistance of 7450, 7500 now, which it has become initially a daily support level. And also looking at the EMA levels, 8 and 14 EMA levels that I have used, you can clearly see that the index is actually in a bullish momentum. And the next daily resistance is at 7650, 7700, which is considered to be April high structure high levels, which are basically at the daily resistance of 7650, 7700, those key levels. So if the index manages to sustain about daily support level 7450, 7500, will be able to expect the index to move up to the 7650, 7700. And of course, if I at the 18 moving average as well, we can see that still it seems to be bullish. And as I move on, as I add the 50, we can see that it is also traded, the index is also above the 50 EMA level, which indicates still a bullish momentum. So the next daily resistance 7650, 7700 could be tested if the index sustains above the daily support level 7450, 7500. So moving on to LOLC. So LOLC actually managed to break one of its structure high levels, which was actually on the April structure high levels, which was at 350, 355. And the daily RSI is at 69.86. Also, we were able to see that breaking that 350, 355 key area, there was an initial retest from that area, and the price managed to continue its momentum near to the daily resistance of 390, 400. So overall, it seems to be in an inclining momentum still. So we can see there are certain higher highs, higher lows, and also now it has come to a higher high level. And if the price manages to sustain about 350, 355, actually the daily resistance 390, 400 could be tested, and breaking that level, we do have another structure high somewhat at around 418, 420. This was actually the February 19th structure high. So this could be tested as well soon as the daily resistance 390, 400 is initially broken. So if the price manages to break, we can expect the price to reach a 490. Else, however, if the price gets continuous rejected from this daily resistance of 390, 400, the price could actually come down to the 350, 55 key level, as if it continues to decline from the daily resistance 390, 400. Thank you. Over to you, Nuwan.
Thanks, Harin, as always. And we hope you enjoyed this week's weekly research update. As always, we will be attaching this report along with the email to our client base. And we hope you guys have a lovely weekend ahead and stay safe. Thank you. Goodbye.